Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Welcome to the College Investor Audio Show. So glad you stopped by today. This is going to be fun today. We're talking about the risks and rewards of international bonds and how to invest. So, the global bond market is far larger and more liquid than the global stock market. Over the last 25 years, the bond market has, on average, been 79% larger than the stock market, according to LearnBonds.com. Bonds provide stability against the volatile nature of stocks. In a 60-40 portfolio, 60% is allocated in stocks, while the other 40% goes to bonds. As an investor approaches retirement, their allocation to bonds increases, mainly so there is capital for them to withdraw during retirement. Foreign bonds can make up part of the bond allocation within a portfolio. Let's see why someone might consider the risks and rewards of foreign bond funds as part of their investment. So let's ask the question, why foreign bonds? Where do foreign bonds fit into portfolio allocation? Well, foreign bonds provide another means of portfolio diversification. A well-diversified portfolio protects capital against drawdowns, or at least outsized drawdowns. Foreign bonds also give you exposure to other parts of the world. If you have bonds in European and Asian countries that are doing well while the U.S. economy is declining, your bonds will do well also, although your U.S. bonds might not. In this case, being diversified outside of the U.S. limits the negative impact of your bond holdings from a U.S. decline. Of course, there are risks when investing in foreign bonds. Bonds from developed countries like the UK, France, Germany are generally safer than bonds from emerging markets like Indonesia, Malaysia, and Kenya. Now, for those reasons, bonds from developing countries should only make up a smaller portion of your foreign bond holdings, assuming you have any at all. For rebalancing purposes, foreign bonds are part of your overall bond allocation. As your foreign bonds rise in value and surpass your bond allocation target, some of those bonds should be sold, and the funds reallocated to weaker areas of your portfolio. This is general portfolio rebalancing so that each area of your portfolio remains within its target allocation, for example, 60-40. So how do foreign bonds work? Foreign bonds denominated in the issuing country's currency, like the UK bonds in British pounds, for example, will have an inverse correlation with the dollar. That means if the country's currency rises relative to the dollar, your bond will benefit. This correlation is a double-edged sword, though. If the dollar rises relative to the country's currency, your bond will be at a disadvantage. There are other factors that affect foreign bond prices, like direction of interest rates, inflation expectations, credit of the issuer, currency markets, economic growth, monetary and fiscal policies of the issuing country as well. So how do you invest in these foreign bonds? Well, rather than buying the bonds of some country directly, which can be complex, you can invest in foreign bonds through mutual funds and ETFs. This makes it easier. These financial instruments will also be more diversified than a single bond. For this convenience, you'll pay a management fee, of course, or an expense ratio. Expense ratios have come down a lot in recent years. Finding a bond with a fee of less than 0.5% really shouldn't be difficult. Here's an example. If you go to the personal investor section at Vanguard.com and then Vanguard ETFs and browse Vanguard ETFs, here you'll find a section called International Bond ETFs, which currently lists 3 different types of international bond ETFs. Let's take a look at 2 of them to understand what exactly they are investing in. Total World Bond ETF, BNDW. So this ETF has an expense ratio of only 0.06%. What makes it international? If you navigate to the Portfolio Management tab for any of Vanguard's investments, you'll see what the investment is holding. BNDW is allocated to the following regions: 3.3% in emerging markets, almost 32% in Europe, a little over 14% in the Pacific, only 0.2% in the Middle East, almost half in North America, and then the other 2.5% somewhere else. In that same section, you can see that the ETF does have some holdings in non-US dollar-denominated bonds. Scrolling down a little bit more until you reach distribution by issuer, we can see this: the sectors and types of investments this ETF is invested in. They include, and I'll just name a couple of them, asset-backed, commercial mortgage-backed, finance, industrial, and utilities, just to name a few. And then next to that section is the credit rating distribution for the bonds held in the ETF. And you can also see this. Below and above two sections is the market allocation. So then we get into the various country bonds that make up this ETF. If you're looking for a bond ETF that is mostly foreign, this might not be what you want. Notice that 44.1% of the holdings are in the U.S. If you already have U.S. bond funds, you may decide to look at another product for better diversification into foreign bond markets. Here's another one. Total International Bond ETF, BNDX. Using the same techniques from what we just did to investigate, we can see that this ETF holds only 3.4% allocation to the U.S., really providing good exposure to foreign bond markets. BNDX provides good foreign bond diversification for anyone who doesn't already have investments in foreign bonds. The expense ratio is only about 0.08%. So as you look at bond fund offerings from different brokerages, you'll see similar fees and information about each bond. Armed with this knowledge, you should feel really confident in your ability to find a good foreign bond fund that suits your particular portfolio. I know we flew through some of that stuff. So if you're confused at all, you can always check this out, thecollegeinvestor.com. You can find this article. Just type in the risks and rewards of international bonds, and then you can look at it yourself and actually see where these things are, and then go to some of the links and resources too that we have there as well. Again, it's thecollegeinvestor.com. Hey, thanks for stopping by today, and we'll talk to you again very soon.